Welcome back. You are watching the Oasis Focus and Finance show. Our special guests in studio tonight, Isma-el Ebrahim and Daniel King, key members of the Oasis investment team. We're talking about prospects for 2016, having a look at the mechanics of our financial landscape for the upcoming year. Daniel, last year you mentioned on this very show that the gross domestic product faced certain challenges last year. How do you see it going forward?
Look, the GDP growth outlook in the short term remains somewhat challenging, but definitely not hopeless over the next year. Okay, so there is this higher interest rates and inflation and tighter credit conditions that is constraining the growth outlook to some extent, and the Reserve Bank and agencies like the IMF and the World Bank are also forecasting growth rates of a similar magnitude to the previous year. We know that from the heat wave, for example, we've experienced firsthand the abnormal weather this year, and that's having a further impact on the agricultural sector, as we've seen in food prices as well. But as we've previously alluded to, export growth presents one of the key upside risks or opportunities, if you like, to the GDP growth outlook in the near term. Also, remember that the electricity load shedding outlook is certainly not as bad as what we had anticipated before last year. So many economists were anticipating quite prolonged periods of blackout in the third quarter, in the fourth quarter. That never really materialized. So there's some upside risk or opportunity from that perspective as well. In the international sense, the global context, yes, there are some downside risks from the likes of China, for example, that's undergoing a very complex kind of transition, and some other emerging markets. But on the other hand, a place like the euro area, which is a massive trading partner for us, presents its own upside risks or opportunities, and to a lesser extent a place like Japan as well. And then from places like the US and the UK, maybe more of a balanced risk outlook. So all in all, yes, it is challenging, relatively subdued at the moment relative to our potential, but certainly not at crisis levels at the moment. Compare us to the likes of Brazil, for example, that is expected to shrink between 3 or 4% this year. That's much more of a deep crisis that they're facing. Russia barely expected to scrape in a positive growth this year. And then again, the longer term view of the country really hasn't changed for us. Our positioning with respect to Africa is really good as a launch pad into the continent. Our positioning with respect to, for example, Europe and the Middle East in terms of time zones is really positive for potential development of our business services industry, which is really competitive. We've still got a relatively young urbanizing demographic relative to the rest of the world. One of the kind of strong points of South Africa that isn't really given enough attention is the strength of our clerical staff as well. One of our major competitive advantages, which these global services companies are taking advantage of now that we see them coming into the country. We've also got still relatively well-respected financial and economic management institutions, and with our natural resource endowment, not only mineral, but also tourism-related natural resources, there's ample opportunity for South Africa's economy over the long term, we believe.
Daniel, any key economic events that we could perhaps look forward to during the course of 2016?
Yeah, I think there's going to be a few events that are going to kind of shape the socio-political and the economic outlook for the year. Things can change quite quickly. Just in the first quarter, we're going to see, as I said, the State of the Nation and the budget addresses. The budget in particular being quite important, gives Minister Pravin Gordhan a very good opportunity to settle things down. The ratings agencies will also be watching that, as will international investors. It's a great opportunity for him to do something bold and for him to kind of mitigate the kind of impact of tighter credit conditions, tighter or higher inflation and interest rates there. Also, politically, we're seeing the local government elections coming up towards the middle of the year. That's going to be, of course, very interesting for investment purposes. It's going to provide important information on ruling party politics, also other party politics, and kind of policy direction over the medium term as well. From an economic perspective, of course, all the monthly and the quarterly data will be watched closely, should be watched closely if you want to get a sense of where the economy is going, particularly the quarterly GDP numbers. Very important to understand those for the general outlook, and the ratings agencies also watching those quite carefully. Globally, it's also quite an interesting year. Politically, obviously, in the US, you've got the primaries getting underway, and then the presidential election with all its colorful characters coming through. Definitely something to watch. Very important in terms of different policy outlooks amongst each of the candidates and what that might mean for them. Also, we've got their monetary policy, their interest rate stance in the US diverging from the euro area. You know, that presents its own complexities. We've seen the euro as a currency depreciate quite a lot in the last couple of years, and that's on the back of that divergence. It will be interesting to see how that develops over the next year. Important theme. And then in Asia, you've got China's policy stance developing as they manage their transition. You know, just in the last few kind of weeks, we've seen a bit of volatility come out of China. You know, policymakers have been very active in trying to stem that and trying to manage that process. So another theme emerging out of there. In Africa, probably Nigeria strikes as one of the more interesting ones. They've got to now manage a lower oil price environment. It's typically quite an important source of government revenue for them. So their policy stance, how that evolves, how they kind of interact with foreign companies that are operating in Nigeria is also very important. And then in the Middle East, similar issue. Saudi Arabia, for example, dealing with the lower oil price, a new reality, how they kind of attempt to manipulate energy markets globally. We also know that they're embarking on something of a fiscal austerity program, meaning they're starting to kind of tax their population for the first time. You know, VAT rates starting to be introduced there over the next 2 years. Quite an interesting development to watch there. So those are some of the major developments and themes that we believe could shape the local and the global outlook over the next year.
Isma-el, taking everything into consideration that we've spoken about, I'm handing to you a curved ball. In fact, it's a crystal ball. Some will say it's a curved ball. How do you see the markets for the next year?
I think globally, if we look at the that divergence in policy between the US and the UK, in the US we're expecting an interest rate hiking cycle. And in European markets, we're seeing monetary easing and lower interest rate environment. So there's a divergence in policy, which does create a bit of uncertainty. And we will see, in the case of the US, we will see money flowing back into the US because of their more favorable interest rate environment now. So that will create a bit more volatility, especially with regards to funding. We've had a number of years where we've had low interest rates. It's been favorable for even some of the very poorly funded companies. They've managed to obtain easy access to finance very cheaply. That type of access to finance will now start to dry up and start to tighten. And we'll see those companies come under pressure, especially on the weaker end of the spectrum from a credit strength perspective. We also have a bit of uncertainty out in China. You will see, commodity prices have come off because of the Chinese weaker growth outlook. And that type of uncertainty will also fuel a bit more of the volatility. And then in South Africa, Daniel mentioned some of the political risk that we're facing, potentially because we've got the local government elections. And then also, our currency where it is. But like he indicated earlier, some of the supply side constraints like the electricity issue haven't materialized to be as bad as people were expecting, so that could be a benefit. If I can just add, Shafiq, in terms of that interest rate environment and the volatility and uncertainty, it's important to note though that that is the outlook for the markets. We expect more volatile environment, and while we've had a very favorable investment environment in the last 5 years or so, where it's been easy for poorer quality companies to outperform, that's made it easy for people to make investment decisions. Most places where you've placed your money, it's done well. But now going forward, the poorer quality companies coming under pressure, it's important that you are able to determine where you need to differentiate in terms of where you put your money. And that makes it more important to have the expertise to be able to stock pick. And in this type of environment, I would certainly recommend that you look at an advisor or a place like Oasis who has the skills rather than placing your money. It's just too much risk.
Isma-el, you've in fact preempted most of my final question, but there's just one little bit left over, and that is, how should we as investors face this landscape in terms of our savings and in terms of our investments?
We've actually talked about it, is diversification. But before I come to diversification, let's look at our offshore allocation. We've taken our full offshore allocation in most of our funds in order to take advantage. So our funds are greatly positioned to take advantage of this weaker rand. We've also got a full allocation of those companies who have offshore businesses, so they benefit, they earn maybe dollar revenues, etc., so they benefit from that. And we also have a good position in companies which export some of their goods and services. So that's one. Then 2 is we talked about diversification, and diversification, there's 5 elements of diversification: instrument, geography, currency, asset class, and sector diversification. And our balance funds are brilliantly, they're designed for this type of environment to diversify. So, and then also an important philosophy of ours is if we look at the companies that we've invested in, and we tend to invest in those companies with strong balance sheets that will benefit us now going forward. Those companies that have strong balance sheets will potentially outperform the weaker companies with weaker balance sheets. Strong balance sheets, strong management team, and also the ability to generate consistently strong cash flows and ROEs through the cycle. So independent of where the cycle is, the business cycle or business confidence, those companies that we've tended to invest in have that ability. And then also if we look at some of our underlying products, if we look at the income fund, the Crescent Income Fund and some of our balance funds, we haven't been invested in some of the South African or in local bonds, which have tended to underperform recently. If we look at, I've talked about most of our funds have got their maximum offshore allocation, which will benefit. And then on the property side, if you look at our property business, the Oasis Crescent Property Fund, that business has no debt on its balance sheet. It's only got cash. So, in this increasing interest rate environment, in fact, it will start generating higher income just from the cash sitting on its balance sheet. So that business is also positioned well to outperform going forward.
Isma-el and Daniel, thanks for chatting to us.
Thank you.
Thank you.
You have been watching the Oasis Focus and Finance show, the first for 2016. And in tonight's episode, we had a look at our prognosis for the economy for 2016. Our special guests in studio were Isma-el Ebrahim and Daniel King, key members of the Oasis investment team. Should you wish to watch any of the episodes of Focus and Finance, have you missed one? Why don't you tune into the Oasis Crescent YouTube channel, the Oasis Crescent YouTube channel. Should you wish to contact Oasis, you can do it on 0860 100 786 or info@oasiscrescent.com. The website, www.oasiscrescent.com. Until next time, I'm Shafiq Morton. Assalamu alaikum wa rahmatullah.